Imagine walking into a boardroom full of the absolute smartest, most ruthlessly analytical venture capitalists on the entire planet, telling them their entire philosophy regarding the future of artificial intelligence hardware is completely wrong, getting laughed out of the room by every single one of them, and then proving them all wrong a year later to the staggering tune of $1 billion. That is the unbelievable reality for Etched, a wildly ambitious hardware startup trying to dethrone Nvidia, who just released a massive progress report on Tuesday. After successfully getting their incredibly complex proprietary chips manufactured by TSMC earlier this year, the startup casually announced that they have already locked down $1 billion in hard contract orders for their fully built-out systems. They are currently stress testing these massive machines with early customers, calling them frontier inference clusters. These are not just loose processors, they are massive, fully integrated bundles packing custom-designed server racks and highly specialized software, all ruthlessly engineered to run the most advanced artificial intelligence models significantly faster, substantially cheaper, and with way better power efficiency than absolutely anything their competitors are offering. When you understand that inference, the actual process of a model generating an answer after you type a prompt, is the single biggest bottleneck and the most terrifying financial drain for modern tech companies, you realize why solving this problem is essentially the holy grail of modern computing. Founded back in 2022 by two incredibly driven Harvard dropouts who secured the prestigious Thiel Fellowship, Chief Executive Officer Gavin Uberti and President Robert Watkin, the company also just revealed they have quietly hoarded a total of $800 million in funding. That massive war chest includes a completely unannounced $500 million mega round that closed back in December, officially cementing their post-money valuation at an eye-watering $5 billion. They have attracted a literal who is who of heavyweight investors, pulling cash from firms like Jane Street, Ribbit Capital, and Venture Tech Alliance, while also securing angel checks from industry legends like Andre Karpathy, Jeffrey Hinton, Arthur Mensch, and billionaires Peter Thiel and Stanley Druckenmiller. The funniest part about their recent press release, loudly declaring they are finally coming out of stealth mode, is that the founders have actively been giving interviews since 2024. But it was not always this easy. Back in 2023, they were literally begging for cash, armed with a highly detailed 30-page manifesto, arguing that general-purpose graphics cards simply would not survive the long-term demands of complex models. Every major investor passed, and they were scraping by on a month-to-month basis, dangerously close to total bankruptcy. Today, the funding environment is almost unrecognizable. Everyone is rapidly chasing inference acceleration. We just watched Cerebras pull off a massive public offering. Grok raised $650 million, and absolute titans like Amazon, Google, Microsoft, and even OpenAI with their new Broadcom partnership are racing to build custom silicon. Etched just survived the hardest part of the startup journey, and now they are holding $1 billion golden ticket.